Sahni, CEO of Raymond, now joins us. Let's connect with him and take the conversation forward. Mr. Sahni, you've recently received NSE and BSE not to go ahead with the demerger of real estate arm. Now, with the approval in place, what could be the timeline of the demerger?
We are expecting that the timeline, now that the NCLT application has been filed, we are expecting that by June or July, we should get the approval and the listing should happen by August, September.
Rate on the sum of the part or the SOPT valuation for Raymond Real Estate, Raymond Realty business?
Sorry, can you repeat that?
Could you elaborate on the sum of part valuation? What should be the sum of part valuation based on, I mean, real estate companies are normally valued on the land bank, right? So what is the land bank value according to you?
So real estate companies today are valued very differently than they were valued earlier, maybe 2 decades ago. So land bank is one way you look at. The other is the earning capacity and the operational intensity that you bring to the business. Also, we operate on a joint development model. So land bank is not so relevant for us. And there are other players also who are operating on that basis. So currently, different qualities of management are rated differently. We believe that we should get a handsome valuation from the market once we are listed and there is a pure play available. And we are expecting at least, if you look at brands like Godrej and all, which is what we compare ourselves to, and they have a price earning ratio of close to 40. So, and sometimes, if the markets run up, it is even higher than that. Now, what actually the value will be, that is for markets to decide. But yeah, I can give you some comps, which I gave one of the comparables.
Okay. Unlike a lot of legacy real estate companies, you now are looking at also acquiring a lot of land bank and building on it. You own the Thane land, but that's about it. Now, in this kind of an environment where real estate prices have gone higher, land prices have gone higher, if anything goes wrong with the cycle, isn't that a risk?
So, if we look at land values today, I don't think land values are gone unreasonable. The kind of margins that most players are making today, I mean, there is, of course, a range of margins that each player is making depending on the strategy that they are following. But given our strategy, our margins are somewhere in the range of upward of 20%, which is actually higher than what different players who are following the same strategy that we are. And there are other players whose margins are more in the range of 15-16%. So we have a lot of room, even if prices move upward from here itself. So we have the advantage and benefit of the Thane land, and also the new deals that we have signed so far are giving us these kind of margins. So we don't see any significant pressure on the margins because the market still remains healthy. The volumes are deep. The prices have not run away, whether it is land prices or the final product prices. So, and the actual user is predominantly driving the market. So I don't think that there is any overvaluation in land values today, which is of a significant nature. There may be one odd deal here and there in pockets that you will see are behaving like that.
Okay, I just wanted to understand what the outlook is in terms of the capital allocation strategy and how that's going to evolve after the demerger. You had spoken about, a need to attract fresh set of investors and strategic partners for Raymond Realty. Do you have any plans or, any potential partnerships lined up?
So today, if you look at the balance sheet or the net worth that the business has, which is what will move to the entity once it is demerged, I think we have significant amount of cash today itself on the balance sheet, which will be used for growth going forward. And the existing projects that we've got 6 projects already off the ground, and looking at more projects in the next 6 months, which will be off the ground and hit the market. There is a significant amount of cash flow which these projects are generating and will continue to generate going forward. So at least for next 2 years, we don't see any need for raising capital as of now, unless circumstances change for us that we look at a much larger expansion. But I think we are already quite ambitious, and given that ambition itself will be self-funding and it will be coming out of our internal accruals itself.
Everything is slowing down. Luxury cars, luxury.
Sorry?
I mean, I'm talking
Yeah.
about the state of the economy. Everything is slowing down, right? And we can connect with it. Luxury cars, luxury travel, luxury hotel bookings. In general, the economy is slowing down. But real estate sector per se is still standing tall. Do you think real estate sector will also face the heat of a slowdown? It could come with a lag effect, but it is coming.
So it's quite possible. It's always difficult to, everybody professes to have a crystal ball. I certainly don't have one. But of course, you do take bets and you have hypothesis basis which you take your decisions going forward. What the next 6 months look, what the next 24 months look, what the next 60 months look. So you have various hypotheses for different time periods. And based on that, we are taking all our decisions. Uh, as of now, I don't see any factors which are indicating that for the next 24 months, there is a slowdown coming for real estate. You may not see prices running away. You may not see, a lot of new launches which may hit the market. But in terms of demand, I don't see a slowdown. There is no factor that I can think of today. I mean, we've seen even increased interest rates. It did not dent the market because the segment from where the demand was coming, that segment doesn't get impacted too much by interest rate hikes. And the point that you made that the luxury segment is seeing some slowdown in other sectors. The answer for that, what we are seeing is that real estate is today getting a larger share of the wallet from the consumer. And that's the reason you're not seeing a slowdown in real estate. And I don't see that changing, at least for the next 24 months, which is about 2 years. And that's the call we have taken, and basis that we are taking our decisions.
And what is the execution timeline then with respect to the 32,000 crore rupee GDV which you mentioned? Can you break up how many of these you'll be doing on the JDAs and JV route, and how many will be new developments?
So as of now on our balance sheet, we have about 25,000 crores worth of GDV, which is coming from Thana itself. And there is another 9,000 crores of GDV, which is from non-Thana projects in MMR itself. We have additionally also started looking at Pune as a market. These are early days. Of course, we've started looking only a couple of months ago, but there is a significant traction, and there's almost a clamor that we are getting from the Pune market where people are waiting to welcome us. Obviously, we will take considered calls and something which is judicious in terms of financial metrics, and only then we will expand in Pune. So there is a significant amount or a large, let's say, business opportunity that we have between MMR and Pune. Currently, out of this, 9,000 crores in Thana is already in the market, 2,000 crores worth of GDV. We have already launched in non-Thana projects. So total about 11,000 crores out of this 32,000 crores is already in the market and performing very well for us. Going forward in the next 6 to 9 months, you will see another approximately 2 to 3,000 crores of GDV from our side, which will be launched in the market in different micro markets within MMR itself.
All right, really appreciate your time and thank you for joining us. Meanwhile, what do we have?
If you like this video, then like, share and subscribe to ET Now.